Only 1% of people in Uganda have insurance, and increasing that figure just became more of a challenge as companies contend with the recently introduced 18% value-added tax on premiums. Industry figures say this has had a big impact on business.
But definitely the introduction of 18% additional cost affects the uptake of insurance. And this was coming in at a time when the stamp duty had also been revised tremendously from 5,000 Uganda shillings to 35,000 Uganda shillings.
In the past, all kinds of insurance products had been VAT-free. Industry players are concerned that these taxes will not only stifle Uganda's competitiveness, but will particularly affect people buying risk covers, including motor third-party insurance, agriculture insurance, and loan protection, which remains unaffordable to the majority. It is feared the added value-added tax could affect the country's insurance uptake, which is one of the lowest in East Africa at less than 1% compared to Kenya's 3.2%.
When things like VAT happen, if you increase stamp duty, people look at insurance more of a tax rather than a policy that is there to safeguard risk. So we have double challenges in that we need to educate our members or our insuring public about the importance of insurance and also the importance of paying taxes.
New requirements by the regulator also compel insurance firms to triple their minimum payouts. The government says the addition of VAT is a move to build a financially stronger industry, but also enable companies to insure higher value businesses like the budding oil and gas sector. This has attracted more international firms to sign up to offer risk management services in the East African country.
We have encouraged the Ugandan players who were here before to participate actively. And they are in the final stages of forming the oil and gas energy pool, which is intended to make sure that a sizable percentage of the risk is retained within the country.
Because of oncoming of oil, there will be deepening of the middle class, and the middle class normally will take loans. And for you to take a loan, the bank will insist that this loan is insured. And we think growth will be seen, but it will come, but at much slower pace.
Insurers, however, are hopeful that although the taxes could spell tougher times for risk management firms, numerous efforts are underway to transform the industry. Uganda's tax body announced this week that it had registered significant revenue growth in the first quarter of the financial year 2014-2015. Michael Baleke, CCTV, Kampala.